Assalamualaikum warahmatullahi wabarakatuh. My name is Amar Aliuddin bin Abdul Jalil. The topic that I choose for this subject, AGR 533, is on why Malaysian ringgit keep declining. Okay, for introduction, Malaysian ringgit is the currency of Malaysia, a South Asian country that located between the south of Cambodia and Thailand. The currency shortened form for the currency is RM, and MYR is the code for the currency. This is the code seen when a currency quotation is required, which is indicating the exchange rate between US dollar, which is USD, and the Malaysian ringgit, MYR. Ringgit means jack, and in an old word referring in the 16th and 17th centuries to a jack age of Spanish coins widely used in a region. The Malaysian ringgit is made up of 100 cents and is issued in values of 1, 5, 10, 20, 50, and 100. Since 1990s, 500 and 1000 values have not been used to help curb money laundering. These denominations are demonized and have no value whatsoever. Malaysian ringgit is officially and informally used in border areas in Indonesia, Philippines, Thailand, and some parts of Vietnam, such as Ho Chi Minh City. The Malaysian dollar replaced the Malaya dollar and the British Borneo dollar at par in June 1967. This new currency was officially referred to in dollars and cents until August 1975, when the official name was changed to ringgit and cent. After periods of extreme volatility during the Asian financial crisis at the end of the 1990s, the Central Bank of Malaysia, which is Bank Negara, decided to stick the ringgit to the US dollar at the rate of 3.80 in 1998. Due to the increase in capital outflows during the crisis, ringgit trading outside Malaysia was prohibited. The peg remained intact until 2005, when Bank Negara returned to the floating ringgit after People's Bank of China and removed the renminbi peg. Renminbi peg, which is the currency that used in China. The initial reaction saw an increase in value of the ringgit against US dollar, as well as two prominent trading partners, the Hong Kong dollar and the Chinese renminbi. After a reduction of 3.8 pegs in 2005, the currency was estimated at 3.08 against the USD, which is US dollar, in 2008. It then dropped back to 3.73 in 2009. After that, it experienced several years of appreciation again, rising to about 3 ringgit per USD in 2011 to the first half of 2013. The ringgit then lost its value, hitting 4.47 in 2016. In the first half of 2019, Malaysia ringgit MYR moved between US dollar USD, which is 4.08 and 4.19. Based on the article that I read about on the drop of ringgit is below against US dollar, what can I highlight here is on the factor of ringgit keep declining. Okay, for the first factor, global crude oil price have plummeted by more than 50% since June 2014 due to oversupply and weak demand. Although Malaysia is a net oil importer, oil-related industries account for a third of its revenue. The price of palm oil are also on the decline, and Malaysia is the world's number 2 producer of palm oil. Both oil gas related products and palm oil account for at least 28% of Malaysia total exports, which is significant enough to reduce the trade surplus as has been the case over the last few months. This leads net commodity exporting country like Malaysia to deal with currency debilitating issues. As Malaysia is a net importer of energy products, crude oil price movement exert a significant influence on the strength of ringgit. Then, China's economic slowdown is the second external factor. The rationale for China's currency devaluation is to boost exports by making them price competitive and thus stimulate growth. China has been trying to shift export-led growth to consumer spending, but this has clearly not have been smooth. Just 2 months before China's currency devaluation, its stock market plummeted by 30%, and government intervention was needed to stop the sale. The sell-off taken together with the overall decline in domestic consumption is indicative of a decline in Chinese consumer confidence. China is Malaysia's top trading partner. Malaysia exports mainly electronic, followed by oil, to China. Notably, Malaysia's continued decline in trade surplus was revealed in 2015 with an increase in oil gas export to China. Given the low oil price, this may be in China's interest, but decline in Chinese demand will lead to a decline in Malaysia's primary export to China. Malaysia will not be able to meet Chinese demand as it has been for the last decade and cost declining in Malaysia currency. Okay, for the final external factor is foreign capital outflow that was triggered by an imminent rise in interest rates in the US. Investors seem to be moving away from investing in risky economies to that is perceived as stable economies like the US, which is United States. Malaysia's share and bond outflows totally almost 7.6 billion US dollar. This will cause the decreased quality in Malaysia currency. Okay, this is the statistic of average exchange rate of Malaysian ringgit to US dollar from 2014 to 2020. Let's take a look. As we can see at 2014, the Malaysian ringgit is at RM 3.27 for a dollar, and it keep increasing about plus 0.64 at the year of 2015, which is RM 3.91 for a dollar. For 2016, the Malaysian exchange rate increasing about plus 0.24, which is at that year was RM 4.15 for a dollar, and maintain increasing for 2017 about plus 0.15, which is RM 4.3 for a dollar. But at the year of 2018, it decreased about minus 0.04, which is RM 4.04 for a dollar, and suddenly for the next year, 2019, it increasing about plus 0.1, which is RM 4.14 for a dollar. For this year, sadly, it keep increasing about 0.11, which is RM 4.25 for a dollar. Okay, in summary, I can relate this topic, which is the factor of declining ringgit continuously and based on what I learned on subject of economics of agriculture production. When the supply of crude oil from Malaysia exceed the demand of crude oil, the price of the crude oil will decrease and it will result in declining of ringgit. It is shown that the price are determined by the curve of demand and supply. Additionally, the demanded party, which is China, Malaysia's top trading partner, was having external factor, which is the slowdown of the economy that trigger to reduce their demand for Malaysia's exported product. Furthermore, because of the unstable and risky economics, the investor from foreign country avoiding from invest to our country that make the ringgit keep declining. It is because of these reasons that I mentioned above make the ringgit declining continuously, and I hope our country can manage somehow to increase the quality of currency of ringgit in the future. Thank you. That's all from me.